This week, it's our quarterly Security Money segment. But first, we welcome Eric McAlpine, co-founder and managing partner for Momentum Cyber. Business Security Weekly starts now.
This is Security Weekly, for security professionals, by security professionals. Broadcasting live from G-Unit Studios in Rhode Island, it's the show where we explore the business of security to improve the security of business. Your trusted source for actionable insights on leadership, communication, and innovation. Get ready for Business Security Weekly. Security can't solve crucial problems when they have to wade through thousands of alerts a day. With ServiceNow, you can easily prioritize and respond to your most crucial business threats. That way you can go from overwhelmed to under control. ServiceNow brings security, risk, and IT together on one platform. Learn more at securityweekly.com/ServiceNow. The question is simple. Have any of the systems on my network been compromised? The answer is harder than it should be. Enter AI Hunter. Active Countermeasures has automated and streamlined techniques used by the best pen testers and threat hunters in the industry to create AI Hunter, a network threat hunting solution that does the first pass of a hunt for you to identify systems that are most likely to be compromised and scores the results on a scale from 0 to 100. You can then research those systems in depth with AI Hunter. Focus your valuable time on the systems that need your expertise with AI Hunter. Sign up for a personal demo today at securityweekly.com/ACM.
Welcome to Business Security Weekly. This is episode number 136, recorded July 15th, 2019. I am your host, Matt Alderman in Colorado, joined by my co-host, who is back in G-Unit Studio, Paul Asadorian. Welcome,
Hey,
Paul.
It's good to be here. Good to be back.
Yeah, we missed you for the last couple of weeks. Glad you're back.
Yes. Good to
Security
be here.
Week. Yes. Security Weekly is returning to Vegas this August for Black Hat and DEF CON. If you'd like to request a briefing or sponsor an interview on site at Black Hat, please go to securityweekly.com/booking and submit your request. We'll also be at DEF CON. I think we're going to be in one of the villages this year and doing a few interviews over there with the community and getting that content back on the network. Also, some of you have told us that you're overwhelmed by the amount of content we distribute. In an effort to make it a little easier, we added the interest list. Go to securityweekly.com/subscribe and click the button to join the list. Paul and I were just talking about when are we going to get the new website up. It has all this new filtering and sorting capability based on these interests. We're going to get that up as soon as we can, make it a lot easier to find our content.
There's a lot of code that needs to be and software that needs to be modified to do that, and we're well on the way. We just got to do some more coding and testing to get there with our own internal application in addition to WordPress as well. So it's exciting. I was telling Matt, I think late last week, that a lot of changes, but the end result, I think our audience is really going to love. I really like it. You know, you can go in and sort and say, I want this show and I want this topic on this show, and show me all the segments that are with it. And it works really cool, really awesome. So I like it.
Just got to get it all kind of bundled up and ready to go. All right, let's welcome our guest. Eric McAlpine has spent over 20 years in the technology industry. Eric is the founder and managing partner at Momentum Cyber, a firm he co-founded in 2018 along with Dave DeWalt and Michael Tedesco. Prior to co-founding Momentum Cyber, Eric was founder and managing partner of Momentum Partners, the precursor to Momentum Cyber. Earlier in his career, Eric served as a managing director with Blackstone, where he co-founded Blackstone's Silicon Valley office and led the firm's cybersecurity advisory practice. Eric began his Wall Street career at Solomon Smith Barney and Citi, where he served as senior member of the enterprise software investment banking team, leading sector coverage in security. Prior to a career on Wall Street, Eric served his country as captain in the U.S. Air Force, where he was honored as the Military Engineer of the Year in 2000 for his engineering contributions to the Joint Strike Fighter program. Eric, welcome to Business Security Weekly.
Thanks, Matt. I think I'm going to hire you to do that for me at all my speaking engagements. That was a solid job. Thank you. Glad to be here.
Thank you.
Welcome to the show, Eric. I think you should have him do it like at the supermarket or like the movie theater. Like, that'd just be awesome.
Agreed.
I'll just I'll just walk around wherever you go. I'll just read your bio
That's
or a
it.
subset of it because your background is just so vast, right? I mean, your career and how you got to where you are. But I want to start with Momentum Cyber. How did it start? I know a little bit of the history because I've been a subscriber to the newsletter and the work that you do. But give the audience kind of a background on kind of where you started and how you got to Momentum Cyber today.
Yeah, thank you. No, I'd love to. So many people around the globe know our firm, through that content. It has become almost a flywheel and a mantra around here to make sure that we continue to provide high quality strategic content to the ecosystem. It's one of the ways that we really pay into the system. So many people up and down the food chain, in our industry, utilize that information and that data to make very important landscape shifting decisions. And so we consider it to be a labor of love now. And so if anybody out there in the audience that's looking at this video wants to get on our subscription list, essentially what you'll be getting is the Wall Street Journal for Cyber that's prepared once a month. We do a mid-year update, and then we do an end-of-year almanac. And so anybody who wants to do that can just send an email to info@momentumcyber.com. But in terms of the history of the firm, Matt, this really is the brainchild of a few of us, a camp that came from industry, and then a camp that came from a traditional investment banking background. And for the first time, we thought that, very akin to what our friends on the buy side do. You've had folks like Will Lynn at ForgePoint and my dear friend Bob Ackerman at Allegis Cyber. They have taken a very specialized approach to investing in cybersecurity on the buy side. And you can think of Momentum Cyber as the sell side or the advisory analog to that. And it was about 5 years ago that I saw this shift into specialization really across investment banking, but very, in particular, technology and cybersecurity. I've been covering InfoSec and security since the early 2000s. As a firm, we have transacted about 50 times in the sector for a little over $15 billion of aggregate transaction volume. Some of the very first deals with Symantec and McAfee in the early and mid 2000s. But it really wasn't until this most recent decade where we felt that there was a need for one firm, not a boutique that had a bunch of different specialties, but one firm to really own the position as the go-to premier kind of trusted advisor for cybersecurity. And our predecessor firm, as you mentioned, the precursor to Momentum Cyber, was a small boutique called Momentum Partners. And myself and my partner, Michael Tedesco, who sits in the office next to me, were the co-founders of what we felt was a white space in technology investment banking, which was really world-class M&A advisors moving down market. So Michael ran the M&A group at Jefferies. He ran the tech M&A practice at Citigroup, where I worked for him. And together, the both of us have worked on some of the largest transactions in the history of technology, talking deals like EDS's sale to HP, PeopleSoft's defense of Oracle, HP Compaq, just very large transactions for the likes of IBM and Oracle and Google and Microsoft, Symantec and McAfee. And what we noticed was, increasingly, in a thick look down market, there was a need for high quality M&A advisors, good board level advisors, down market. And so that was our original thesis. And about 2 years into that journey, through some common connections, and we were doing a lot of work in cybersecurity, but it wasn't the only thing that we did at Momentum Partners. And a couple of years into that, it was the summer of 2017, I got a call from Dave DeWalt. And Dave had retired from industry after running, sort of the who's who of cybersecurity companies. His reputation needs no introduction. Offered Michael and I, his thesis, which was there needed to be advisors and operators working under one umbrella to help his peers, CEOs at some of these big companies, some of the little companies, some of the startups that he advises, make better decisions. And so we felt the same way. And in January of 2018, we relaunched Momentum Partners as Momentum Cyber, the premier advisor exclusively focused on the cybersecurity ecosystem. And then there is a sort of what I would consider to be a very important nuance to the way that we advise companies. We have a model here which we call lifecycle advisory. And what is lifecycle advisory? Most people, just assume that investment bankers are there for the end, right? You're there for the big exit, the big outcome. If you hire an investment banker, you put a for sale sign on the company. And so while, there's positive connotations to working with advisors, there can be negative connotations as well. And we wanted to dispel a lot of that in that, there are companies throughout their life cycle that could use board level experience and advice, whether that's operational advice or from folks who have advised boards on matters of strategic importance, raising capital, whether to acquire companies, whether or not you're at that fork in the road and now is the time to consider an acquisition yourself, what have you. And in cybersecurity, the exit can happen at any time. It can happen very early in the life cycle of a company, the Series A, the Series B, the Series C. You can do it when you're public, much later stage. But along that journey, you're really heads down focused on building the business. And so what is lifecycle advisory at the end of the day? It's our service offering to help companies grow and scale throughout the life cycle and ultimately to maximize that outcome, that exit, whether that exit's in the form of a trade sale of the company or taking the company public. And so activities that we get involved in that are just a little different than your average bear in our world would be helping companies with go-to-market, channel, alliances, business development, and then start thinking corporate development, strategic development, and the exit path.
Eric,
so that's what Momentum Cyber in a nutshell.
I have a question. I have a lot of questions actually. But my first one is I think since like the .com boom, right? When I look at cybersecurity today, I haven't seen, other than in cybersecurity today, a lot of really early acquisitions. Like I've seen, you mentioned Series A, like I've seen some companies that are like barely seed funded get acquired. And a lot of that's like based on the technology I'm looking at, like, wow, they have really cool tech, great team, and then all of a sudden they're acquired. Is that typically a good thing or bad thing, or like it's not that polar of like good or bad, right? Like what's the deal with really early exits?
Yeah, it depends. And typically if you're getting acquired that early, it's for the team and the technology. Mm-hmm. Let's face it. 2 years ago, we helped a company called WebLife. They exited to Proofpoint. The company had raised $3.5 million, right? The transaction was a $60 million deal. We're talking about a 17 times return on invested capital in under 18 months. That's a fantastic and phenomenal return. The founder still owned nearly half of the business. Mm-hmm. And so from a life change, from a life event, that was certainly life-changing for him and his family. The team was very small at the time, so he was able to spread that wealth around. And he had done something that was very novel, and Proofpoint, Gary Steele and David Knight, mm-hmm. Manish Saran, they all saw that and saw that opportunity. And then it became part of the art of negotiation. How do you value a company that has less than $1 million of revenue?
Right.
That's the fun part.
Yeah.
And that's the fun. Yeah. I get out of bed every morning thinking about that puzzle and my clients and changing their lives.
Right. Now, when you say down market, you mean you're working with smaller companies than traditional? And like, how do you define smaller if that's the case?
Great question. So we take the market and we look at companies below $100 million in terms of what their exit outcome is expected to be.
Yep.
We look at companies in the $100 to $500 million range. So think of it as a pyramid.
Mm-hmm.
You've got below $100 million, and that mid band is 100 to 500. And then above that, at the tip of the the tip of the pyramid would be greater than 500. And just to give you some statistics here so you can understand the size of that pyramid, year in and year out, there are about 175 to 200 deals in our space. How many of those are going to be greater than 500? Typically 10 to 12.
Mm-hmm.
How many of those are going to be greater than 100? About 30 to 40. The rest are below $100 million. So that gives you a sense of the size of the marketplace. We believe, and that one of the reasons why we felt like there was a need for a brand new firm in this space solely focused on this opportunity is that in that middle band of 100 to 500, that's considered to be typically somewhere between hitting a double and hitting a grand slam in cybersecurity investing. And so that's the part of the market that we're predominantly focused on.
When companies get acquired, there's a lot of things that can happen. And I think me personally, I like to see a company go to IPO, and I feel like that's like the greatest success, but that's not necessarily true either, right, Eric?
Not by the numbers, Paul.
Yeah,
so,
it's true.
Year in and year out, it's a fantastic year in my space if we see somewhere between 3 to 4 companies go public in cybersecurity in a particular year. We're like,
sure.
Wow. 5 last year. I mean, that was a record. We've had 2 this year. One very public. It's so far the most successful IPO in the history of cybersecurity capital markets, CrowdStrike.
Mm-hmm.
But there's also another smaller IPO out there that I don't think as much people pay attention to, but from a performance standpoint, they're performing almost as well, and that's a small company called Tufin. Both of these companies are up nearly 100% over the price that they priced the IPO at.
Right.
Yeah, we cover obviously both of them. Tufin is actually a sponsor on one of our programs, and we did cover their IPO last quarter when they went. So I agree with you. I mean, the CrowdStrike IPO was phenomenal, one of the best IPOs in our space. So I want to talk a little bit about a couple of these trends, right? Will we see a couple more IPOs this year? If we do, who are they, right? Tanium has been sitting around there for a while, dabbling in the IPO market. I'm curious, Eric, kind of what are you seeing on the public side with potential IPOs? And at some point, I want to talk a little bit about funding and some M&A activity as well, kind of what you're seeing.
Yeah, I'll get to both of those. I don't think I actually answered Paul's question, though. I got sidetracked on talking about the two. The point I was trying to make is, so far this year, Paul, we've had 2 highly successful, one very big,
mm-hmm.
one smaller IPO. But year to date, we've had almost 100 M&A exits in our space. And at this pace, we'll hit 200, which will set a record. And, when you look at that, the chances of you taking your company, full stop from seed funding to A to B to C to D to crossover to eventually taking it public are about 1 in 1,000. And if you look at the opportunity to make a nice return for investors, but there are also 2 other constituents, right? So there's the investors that everybody's focused on, or they are focused on themselves. But then there's also, are you doing good for your customers? Is this a great outcome for the CISOs that are using my product? And is this a great outcome for our employees? And our focus at our firm is to only work on deals where all 3 of those constituents are happy at the end.
Well put, Eric. Well put,
the fact of the matter is you have a 1 in 1,000 chance of taking this thing public. But if you build a great company, no doubt you'll get interest either from a strategic acquirer or private equity.
Agreed. Sorry, Matt, we're now going in different directions, but With Duo Security being purchased by Cisco, to me that was one of the biggest M&A deals in cybersecurity. Is that true? Dollar amount value?
One of the largest recent deals in cybersecurity. The transaction value, if I recall, was $2.35 billion.
Yep.
So far, Dave's sale of McAfee to Intel at 7.7 is still the largest deal. There was a recent rumor, as we're all aware, and it's very well publicized, about Symantec and Broadcom, which would have far overshadowed that. But so far, that's the largest deal. But yes, a couple $1 billion deal in any particular year is by far one of the largest deals.
And to me, that was highly successful. Everything that I've read about it, everything customer of Duo that I've talked to, employees, it's just been positive all around. Like you said before, investors, employees, owners, and customers are all happy, it seems like.
And acquire, right? The fourth constituent.
Yeah, right.
So yes, Cisco, my friends at Cisco are very happy and very pleased with that deal. That deal was a couple years in the making, and it actually took a year to get done. Certainly didn't happen overnight. It was very well calculated and very well orchestrated and executed.
Mm-hmm. Sorry, Matt, you had a different line of questioning that I don't want to lose track of.
No, I mean, while I've got Eric, right, I'm curious on trends. What else is coming, right? Because we've seen some interesting. Duo was a great exit. I think Cylance to BlackBerry was a great exit last year. Obviously, the Symantec Broadcom deal could be huge, right? So I do want to get some insight on the public market and the private market from Eric on what else we're going to see, right? Do we see another couple IPOs this year, kind of what that trend looks like, who they potentially are? And then I want to talk on the private side, funding and some M&A activity.
Sure. Well, let me start with the IPO pipeline. So here's the IPO pipeline that we track. Companies like Centrify, Cloudflare, Darktrace, Exabeam, Palantir, Pindrop. I don't know if you know that company, and based out of Atlanta. Fantastic company. Ping, Sumo Logic, which is killing it, and then lastly, you mentioned Tanium. So there are, there are a few that I haven't mentioned that could very well be placed on your personal IPO backlog, so or pipeline. But these are all companies that could go public in the next 12 months, and I believe that at least 2, if not 3 of them will be public in the next 12 months.
That's good. Awesome. So that means we got a really good pipeline of IPOs.
We do, and we've got a really healthy capital markets backdrop to keep it up. We're going to have an interesting year next year in terms of it being another election cycle. So that's always makes things a little bit trickier. But in terms of the fundamentals, they're all pointing towards another 2 or 3 of these high quality IPOs. Yes.
Yeah, and typically we would start to see that in the fall as we're getting closer to the election, which means we have at least a good 12, maybe 14-month runway, potentially.
That's correct. And I'll say this, cybersecurity is not a partisan issue. Both sides of the aisle fundamentally believe that this is a problem that we're all tackling and that they all both care about. So there are issues where I feel like an election cycle could have, great impact potentially on whether or not a company goes public. Certainly if you were a company in the social space, for example, given all the data privacy issues that Facebook and some other companies are tackling, but we need strong public cybersecurity companies out there in the marketplace.
Yeah, agreed. We agree wholeheartedly. So where do we see some interesting investments last quarter, which we'll cover on the next segment in detail, but there's still some good funding rounds coming out. I think there were almost a half a dozen at 100 million plus last quarter. So, where do you see funding going from here?
Yeah, there were 11 over $100 million year to date. So maybe there were half a dozen last quarter, but so far we've seen, almost a dozen capital raises of over $100 million. So far we're about $5 billion of investment into the sector through the middle part of July, right? Last year, we had $7 billion, just under 7, 6.8, the whole year. I called the peak last year. I called the peak the year before last. So I'm just going to continue calling the peak because apparently I'm continually wrong in that regard. Yeah, there just certainly seems no end in sight. What we're seeing as a trend, though, towards larger rounds, and when I say larger rounds, I don't just mean the $100 million 9-figure round that sort of captivates us all when we read TechCrunch, but even as I talk to my Series A and Series B investor friends, they're taking a bit of a more concentrated approach into those companies that they really believe in. And so there's a less appetite to just kind of take a fund, an early stage fund, and spread it as wide as investors did a few years ago. When we look at the data in each one of the different series A, B, C, or D, we're seeing a trend towards higher quality companies, a higher screen on those investments, and larger deal sizes. But we certainly expect the transaction flow to stay strong. Identity, there have been 27, I'm reading some notes here in front of me, almost 30 deals in identity this year. The idea, we still haven't killed the password, but there's companies out there trying to do that for us. And so, we see a really healthy private market for cybersecurity for some time to come. Nothing's slowing down. New funds are forming. And I think if you look at that, LPs are, even though they have plenty of opportunity to put their money into existing funds, the KKRs and the Blackstones, my former firm, and there's great funds up and down Sand Hill Road and in Boston and in the Beltway. We're still seeing new funds form that have a cybersecurity only thesis. So.
That's good for the industry. We know the big three that we always talk about: Allegis and ForgePoint and Clear Sky. And then you start to see others start to come in later rounds, right? 10, 11, and Bessemer and a number of those folks, taking more concentration in the later deals. And I think the other thing, Eric, I'm starting to see a little bit is I'm seeing bigger A's, right? I mean, back in the day, A's were maybe 3 to 5 million. I think the Edgewise one was like 11 million. I'm also seeing some bigger A's. Is that because they're concentrating on fewer, higher quality, and then giving them a little longer runway to execute on the Series A?
There's actually, you mentioned 3, but there's, I call them the 5 horsemen. So there's 5 companies, there's 5 funds that specialize in cybersecurity that sort of captivate us. And that's the 3 that you mentioned: ForgePoint, just terrific people, great fun; Allegis Cyber, Bob and Spencer, amazing fun, amazing people; Clear Sky with Alex and Peter and Jay. But then there's 2 more. There's 1011 with Alex Dahl and Mark Hatfield, and then Night Dragon, which is Dave DeWalt's fund with Ken Gonzalez. So those are the next time you mention those, mention the 5 horsemen, Mark.
I knew Night Dragon because Dave and Ken and I were at GCIS. We had that conversation. I forgot to mention him in the mix. Is 1011, because I was used to seeing 1011 a little later. Have they moved a little earlier stage on the cyber side now fully?
They do A's and B's, so they do early. They just invested in a YL company. I think it was Vulcan Cyber, if I'm not mistaken. So that was a seed funded by YL Ventures, Yoff Liedersdorf, and Ofer Schreiber. So they will take some early stage investments. But one of the things that I've seen some of these cybersecurity focused VC funds do very well, which is to take. So some of them just have an extraordinary amount of intellectual capital and intellectual property around cybersecurity, right? Just the talent that they have, either in-house or access to, that the large funds just aren't going to do on their own. So the big funds being an Excel or KKR or Blackstone. And so you've seen 2 camps form already. You've seen companies like 1011 team up with KKR so that they can kind of stretch up and write bigger checks in a syndicate. And Clear Sky has done the same with Blackstone. No surprise there with Jay being a fellow Blackstone alumni. So I thought that's been pretty interesting to watch.
Yeah.
Eric,
you also have.
I was just going to ask. We're talking about the different types of funding and different, investment firms. How much does your technology decisions as the founder play into it? Right, like I put on my CTO hat here at Security Weekly, and every day we're making technology choices. Right, which cloud we're going to be in, what platform we're going to build our product on. How much does that matter versus like just the end result, right? In terms of intellectual property and the problems you're solving for your customers?
Yeah, much more the latter. It's not my experience that investors are either capable of or are going to find that their value add to you is to help you in some of those architectural decisions. I mean, they're really betting on you and your experience to do that as the founder. Most of the founders in our space are technical in their background, right? I mean, certainly investors are going to shy away from a company if you are going to build it on legacy architecture. They're almost always entirely focused on modern architecture these days. But the decision to be in Azure versus AWS or Google Cloud, I haven't seen, and maybe there is a case out there I'm not aware of, where an investor told a company that their capital was conditioned on going in one of those three directions.
Yeah, it's more about how you solve the problem best for your customers, right? Whatever technology you're using, you got to prove that you're solving it for those customers, basically.
And is there a large enough end market, right, for that? For that offering, is it a platform? Is it a feature, right? And what is the sales cycle for that? So there's a litany of questions that are asked by investors that get them excited about unit level economics and the like. Much more than some of the tactical architectural questions that may be on one's brain.
Yeah, I think when you're choosing technology, certainly one of the things that I've seen companies that are successful have in common is that time to value for the customer. Doesn't matter how you get there, but the deployment cycle and the amount of time that, from initial deployment to generating value for the customer is huge, right?
Yeah, you said time to value, time to deployment, just the ease of deployment. Can this be downloaded? There are platforms out there where, take a SOAR platform, right? I don't know if you're familiar with that category, but security orchestration, automation, and response. This has become a critical component to a next-gen security operations center, right? We don't have enough tier 1 and tier 2 analysts, or the tier 1 and tier 2 analysts are being overloaded and bombarded by, alert fatigue, for example, or phishing attacks, right? Which is a great use case for a SOAR platform. Can we automate the workflows of those? Now, that is a pain point that everybody in the world has, right? And so, if there is a problem within your security organization where, if there's a particular pain that can be solved by downloading a piece of software off of the internet and getting going in that day, and then basically being up and running in a week, that is going to win out more times than not than a product that has a heavy services motion with it, where you need people on site for days or weeks. So certainly that is an important criteria, and the more that you can make that time to value argument and make it easier for the customer to deploy, then typically the greater success you may have in winning that customer over, because every category's got competition.
It's true.
Right. Yeah, we've seen some interesting activity in the SOAR market, starting last year with the Phantom acquisition and then Demisto. So we've seen definitely some interesting stuff there. There's another
capital raises this year, Matt. So also mention Simplify and Swimlane.
Yeah, so, Swimlane. Yeah, I mean Cody Cornell from Swimlane's just up the road from me. We have conversations often, right? So yeah, you've got some other couple independent players still out there.
Yeah, there's a couple that are in the works too. That's I can't say much more than that, but there are a couple more in the works.
We've also seen some interesting movement from private equity. You talked KKR a little bit, but Thoma Bravo's been doing some interesting stuff as well. How do the private equity firms play in here longer term, and kind of what's their strategy, and how is it different than the VCs, or is it different?
We have this meme in our shop, Matt, that private equity hearts cybersecurity, and it's just they're here to stay. And I think of it as a great thing. It's the sign of a maturing market. It's a sign of an evolved market, and certainly they play an instrumental role in companies who need to either innovate or restructure in a private setting and come out at the end of that a much stronger company. Take a Blue Coat, for example. But yes, Thoma Bravo, wow. I mean, is there not a company in our space that they can't take private? Seems like they're doing every deal these days. I think that at one point in time, look at our friends at Vista. Vista not only has their large flagship funds, which are doing, some of these very large take privates, but they also have a smaller fund called their Endeavor Fund, and they just raised a second fund for Endeavor. The first one was, I think, 650 million or 560, something like that. But the second fund they just raised was $850 million to do smaller software deals, and security is a big part of their thesis.
That's great. Yeah, I mean, just the acquisitions, Imperva, and just a lot of very interesting moves from private equity. And so to your point, that means we're becoming mature as an industry because private equity is here and here to stay. I think that's a good thing for our industry.
And another phenomenon that we're seeing too, Matt, that I think is just another barometer for health in our sector, which is this idea that private equity can now acquire companies at pretty good prices, competitive prices from VCs, right? So that VC to private equity crossover. For the longest of times, you would never see a venture capital syndicate in cybersecurity sell to private equity because there was just this notion, well, they pay low prices for public companies where the public has gotten tired of them, right? And so that's no longer the case. I mean, look at, I guess the best recent example is Insight, paying a very strategic price for Recorded Future. But you had, there's just, Madison Dearborn, which is not a name that we talk about that often in our space, buying Blue Cat Networks. So, from ForgePoint, which used to be Trident Cyber. So there's a lot of examples of that crossover, and we're seeing that more often too.
That's interesting. Paul, any additional questions for Eric while we have him here?
Eric, the data that you have available today from your company, I'm assuming there's you can subscribe for free to some of it. Who's the audience, and what decisions are they making based on the data that you provide?
Yeah, it's a good question, Paul. I'm gonna plug the team that does this. We have a bullpen out there that just really lives and breathes security as a culture. Mm-hmm. They maintain a proprietary platform for us called CyberCloud. CyberCloud has now over 1 million unique categorized data points on the sector, everything from funding to M&A to multiples to employee headcount to revenue. A lot of this is very proprietary data that we've collected over the years. And the UI to that, or the public, what the public sees is these reports that we publish on a periodic basis. And the audience for those reports are, originally was the C-suite, mm-hmm. but we found that chief security officers who are now part of the C-suite, folks that are in the security organization, investors, a broad swath of folks, government, had a liking to the content as well. So, we've open sourced it. It's free. The audience now, is upwards of 20,000 folks receive this content. So if anybody wants to, I think I gave the email in the intro, but just info at our website, or you can go to the website and there's a tab there called the Intel, stands for intelligence. And in the Intel tab, you can see categorized content. We do a lot of other interesting content as well. We recently co-authored a white paper with our friends over at Optiv, that's a partner of the firm. They have a unique set of data. They have all this channel data, right? Where we have all the strategic data. So for the first time, we co-wrote a piece on the SOC with them. So we'll do these one-off kind of bespoke research pieces from time to time, but this is our giving into the ecosystem, to the community. We give all this away. You have to pay us for our strategic advice.
Gotcha. And so, I mean, for security companies that are looking for competitive intelligence on their specific sector, I would imagine be useful for that purpose as well.
We do sector deep dives. So for every subsector within the ecosystem, I don't know if you can see it behind me. I'm going to turn my, that may be a visual that your audience has seen.
I think I've seen that before.
That's really kind of what put us on the map. Was making the map. We created the map. And so that's called the Cyberscape. And so the Cyberscape is a taxonomy where we did it for ourselves first, and then we shared it with our closest clients, which was to be able to have that board level conversation about what's going on in this very complicated, noisy, messy ecosystem. And within the Cyberscape, there are categories. There's about 25 primary categories and about 50 subcategories. And we write specific pieces on the primary and subcategories. So you can see them in the content.
That's awesome.
Paul, I've been using the data. We used it when we were running competitive at Tenable. I've continued to subscribe to it. I use it as one of my data sources for this show, which is the Security Money Show. And I think a lot of people can get a lot of value out of what Eric and the team has published.
Awesome.
Eric, thank you so much for joining us on Business Security Weekly.
Matt, Paul, it's a pleasure to be here. I had a lot of fun. Thanks.
Thanks, Eric.
Thank you. We'll take a quick break and then cover our security money updates from last quarter.